Are you getting a bunch of mixed signals about the real estate market right now, especially in Detroit? Well, this video is for you. I'll be breaking down what I see on a day-to-day basis and what's going on in the real estate market in Detroit and Metro Detroit. And I'll be giving you my prediction at the end. So I made a video a few months back, you may have saw it already. It was giving you a little bit of an update of the market. Now I'm giving you another one from what happened then into what actually came to fruition. So a few things have changed. The bidding wars, the over asking, and then appraisal guarantees are pretty much gone. I probably haven't written an offer with an appraisal guarantee in months. The amount that you gotta go over asking in a quote unquote bidding war has drastically changed. The only time we're really seeing bidding wars if a house comes on market and it's impeccable and it's priced correctly up front. That's the only time that we're actually seeing bidding wars. And even in those, it's not like the one we had just last year. You don't have to forgive your firstborn to get a house, which is a great thing for, I think, everybody involved. Also, one of the main things that has changed this is rising interest rates. Before, earlier this year even, you can get an interest rate in the maybe high 3s to 4% range. Then it creeped up right around the summertime. Then you were right around in that 5% range. And then it hit a major accelerator with the Fed hitting the gas. And then we rose up to the 7.5 range, which we were just at within the last month. But over the last week, things have cooled down just a bit because our inflation numbers dropped down just a little bit. And that's what the Fed was aiming to do. So they keep rising all these interest rates in order to try to slow down inflation. And once the US gets a hold of inflation and it slows down and normalizes, then also those rates start to come back down too. But more of that ahead later. So how is that affecting Detroit? So Detroit has always been a very unique market. It's been a standalone for sure against a lot of different markets in the country. Not much has changed in Detroit. Our prices are staying pretty stable. The inventory is about where it has been, slightly less for sure, but that's just because people aren't putting as many homes on market. There aren't as many fix and flips as there were before because the flippers are starting to get a little worried, and so they're trying to pull out the market a little bit. So the majority of people that you're seeing on market right now are homeowners that actually need to move for various reasons. I think of my last few offers in Detroit properties, we've pretty much come in at asking or just a tad under asking and got our offers accepted. And that's kind of what we're seeing around the Detroit market a lot right now. If you come in too far under asking, they're just gonna turn you away, and then they're gonna get their price within the next 15, 20 days or so, because the demand is not completely gone. There are many people still out here shopping for homes, and Detroit is still one of the most undervalued markets in the country. And what I'm also seeing in Detroit is an influx of investor buyers, right? So the fix and flippers have kind of tapered off a little bit, but the buy and hold investor has skyrocketed. And what everybody is learning across the nation is that Detroit is the #1 cash flow market in the country. And we know what you want to have when the prices start to slow down or start to pull back: cash flow. Now, Metro Detroit is a little bit different. So we're starting to see the inventory numbers rise a little bit here, but we're still under supply for sure. But the inventory numbers have crept up a little bit. So it's one to definitely keep an eye on. We have a kind of an influx of inventory in certain pockets around the Metro Detroit area. And we're not seeing a drastic slash in prices like a lot of people have estimated or anticipated. We are seeing kind of marginal pullbacks from where agents have listed houses based on comps that were set over the last year and a half, which were just a little overinflated because interest rates were low, so you're giving way more for the house than it was worth. When interest rates rise, that's really not gonna stick. So we're starting to see pricing be leveled at where they probably should be, and hey, that's a good thing for everybody too. I actually just had a call with a buyer today that's moving from out of state Iowa, and they want to move and relocate here. They're basically saying, hey, it looks like there's a lot of inventory in the Woodward corridor where we are, but it looks like my money is going a little bit further on the east side, let's say in the Warren or something like that. So we want to kind of look over there, even though there are less houses. So that's kind of what's going on right now, because people are looking for a deal and they're willing to sacrifice some of the luxury, so to call it, to get one. I was pretty accurate in my last prediction and it's still playing out, but I think I see more of the same happening. I think that we're going to continue to see prices kind of normalize. They're not going to get crazy, and we have to really do a great job as realtors to price the home appropriately right now. And a lot of realtors are learning that as they go right now. As we enter the winter market, it always slows down no matter what, especially here in the Midwest. So we're gonna see a little bit of that for sure. But with the rate of inflation coming down little by little every month, I expect that maybe even by the midpoint of next year, we'll see rates kind of normalize to get more in that, 5% range, hopefully 4% range. That's historically pretty low. And then once that takes place and inflation really kind of settles down, there's gonna be a lot of pent up demand in the system, and we're gonna see prices take off once again, probably around 2024. So if you've been on the sideline or you're thinking about making the purchase, right now it could be a very good time for you to kind of get in, strike while the iron's hot, and everybody's kind of in limbo trying to figure out what's happening. And you can go ahead and secure your property and wait for the rise that should be coming in the next couple of years. And with that, that's my quick synopsis of what we're seeing today in the Detroit real estate market. If you want to know more or you want to move to Detroit, feel free to first hit the subscribe button down below, and then feel free to reach out, because I'm a full-time realtor and I help people move to the state of Michigan or within the state of Michigan every single month. And I love to have your back in your home buying or selling journey. And with that, I'll catch you on the next one.